The flash crash that had to happen. Last week we reported on dark pool activity. Now we're seeing some of the largest transactions ever recorded going through at the highs. So is it all over for the Chinese stock market? In today's video, we take a look at that along with what's going on the S&P 500. NVDA is recovering. Meanwhile, the rest of the market seems to be selling off. What does the options tell us about flows? And then there's crypto. Will it actually be October for the biggest coin on the markets? We've got some key levels that we all need to be looking at in today's video. And then, of course, the last one, another overbought signal. Put-call ratio starting to get to the dangerous levels. That and more coming up in today's show as we cover stocks, commodities, and cryptos together. Let's get into it, guys. I'll see you in a moment. Well, welcome back everyone to The Daily Show. My name's Tom. In today's video, we're covering the latest macro lead indicators and the hottest charts we all need to be looking at right now. But it was a sea of red except for one green, which was NVIDIA. Will the upgrades, though, on NVIDIA be able to stabilize the market for now? We'll talk about that a little bit later on, along with options flows. But let's get into the breaking story of today's video. Of course, it is the Hang Seng and Chinese markets showing a massive flash crash on them. And of course, this is exactly what we expected and we started to see last week in our recorded videos. If it's your first time here, make sure to subscribe and click the alert buttons down below because this data was absolutely imperative. And we spoke about this stuff on our Monday live show, which we do free every Monday before the market opens. Let's talk about FXI though, because we were seeing transactions that just mind-boggling in size at these highs. The number one largest transaction, the number two largest transaction, and of course, all of these huge transactions as the profits started to roll in after this massive rally, thanks to Chinese stimulus. Now, you may say technical analysis doesn't work, but when you think about where all of this was happening, it was all happening at that supply zone. And of course, this really went hand in hand with some of the activity and information that we shared in last week's video. Lots of transactions also going through 3x leverage funds such as Yin here. And you'll notice here that we have, again, massive ones right at the highs. So it's clear that, to me at least, that profit taking has started to appear on this market. And we might be in for a bit of consolidation, if not sell-off, moving into the next kind of big move. Now, the next question becomes, is this the real deal? A lot of people are going to start to doubt whether this is actually a thrust getting China out of a recession. Well, as we've already talked about, this was really a squeeze. Short interest was massive over the last couple of weeks, and that's led on to a significant rally. And you'll notice that in all of the previous times where we've seen significant rallies, they're generally followed by a decent amount of consolidation. It's likely we're entering into one of these periods, but in these particular zones, when we got 10-day advanced decline levels like we've just seen, we tend to be actually through the worst of it. And what that's showing is we're probably now in a basing structure within the Chinese markets, where, in my opinion, and I'm sure many of you out there, we're looking for further Chinese stimulus to come from the PBOC into the future. And the market will basically wait and complain until this happens and then probably go on its next big move. So for China for now, it looks like it could be all over in terms of the current bullish rally. Let's now talk about the American market though, because of course we saw the non-farm payrolls. We didn't quite get our video out in the weekend, but usually we do. And I didn't get to discuss this except for in our live show. So I thought I'd briefly cover it here so we can understand how the non-farm payrolls really interact with this market. Of course, was the number strong? Absolutely. 254,000. Really a lot of these jobs, though, being second jobs that people are taking up. And as usual, the revisions were in. This time, though, we saw two revision ups. We saw a revised up in July and a revised up also in August. So basically, we have to start questioning, why did the Federal Reserve cut again? Well, of course, they did do a 50 basis point cut, but what this is basically showing us is that in their dual mandate, one was inflation, one was jobs, they've now moved over to the jobs numbers, and for at least now, it looks like it's relatively strong. We can see where the jobs were coming in. They're still all in that leisure and hospitality, private education and health services, and of course, a little bit in the government jobs. And this is really where the numbers have continued to show for the last 3 months. More importantly than this, though, it seems like a standard September. If we look here at September in 2024, and then we go back to September of 2023, they have very similar numbers. In fact, it was almost the exact same number in September of 2022. So the real question will be what actually happens in October. Some have been strong, such as 22. Some have been weaker, such as 23. So I think the next 2 months will probably show us a lot more about the jobs numbers and what the market wants to do. What did happen though was we saw yields drop, or yields go up. So basically what ended up occurring was interest rates said, well, we don't think there's as many cuts as we once suspected. And this might seem on the surface kind of bad. You might say, well, the markets are going to go down from that. But as we know, if the Federal Reserve was starting to do what the market was telling it to do, which was basically a November 50 basis point cut, that would not be ideal. In fact, in most cases, we want to see what we call a slow cycle worth of cuts. We started hot with 50 basis points, which most people didn't expect, including ourselves. And then we actually start to see 25 basis point cuts. Well, that's okay. If we see 50 with 50 with 50, that's certainly a massive question mark. So in most cases where you see slow cycle cuts and an expanding, still growing GDP and economy, that tends to bring relatively good bullish structure. And it's why we've argued that even if we see a sell in October in this case, then we're most likely going to lead into bullishness by the end of the year. So let's talk this week because there's a lot of information coming out. We have the FOMC minutes on Wednesday. Then we have the CPI number, which will matter more than we would have originally thought because, of course, non-farm payrolls was quite strong. Will we see reinflation starting to occur already? This is on the 10th of the 10th, which is also a Tesla event day. And then we have JP Morgan kicking off earnings season. So we know that with JP Morgan, this is going to be a huge deal. And banks will show us kind of how resilient the economy is underneath. This earnings season is probably the most important of this year, just like every other one has been. And the reason is because the market's moving now towards are earnings actually living up to expectations. We know that basically Wall Street, all the economists, all they're doing is upgrading. We will need to see, of course, the biggest stocks coming along and showing some decent resilience there. Now, what are the signs for potential weakness into this earnings season? Bullish percent index obviously crossed above 80, which is a read where you want to start saying, well, maybe it's a little bit overbought. We got the McClellan oscillator that was obviously overbought. We've got moving averages that are too far away from the standard kind of means, the 50 and the 200 in particular. And now we have another one that's just started to appear, which is, of course, the put-call ratio on equities. And we're starting to see put-call ratio on equities go below 0.48. Now, when we start to see this, it can show us that there are a little bit too many bulls in the market. And that's not necessarily a bad thing for the overall run, but it can show some little bit of decline for now. Basically, a pullback in time, which is a sideways market, or of course, a larger correction that could move into like maybe the 5 to 7% territory. Do we think there's any more there? It seems unlikely considering what we saw in August, and we've talked about that several times. Now, this is an interesting chart here shared by Seth Golden. Basically, it shows you personal savings, PCE, consumer loan credit cards, and consumer delinquency rates. And what you'll notice is that on pretty much all of these reads, we have in general what I would say is a fairly solid looking market. Basically, we're seeing delinquency rates actually coming down, contrary to what most people think. And of course, we also have consumer loans on credit cards actually declining a little bit, even though people are taking obviously quite a lot of spend on credit cards themselves. Now, this has a lot of main economists going very bullish on the markets into the end of the year. We've seen Goldman Sachs and we've seen many other large institutions coming out with their targets for the end of the year. And it seems like across the board, everyone's going for 6,000. That seems to be the kind of rule. And what they're thinking is that we will see a bit of a correction in October, followed by a super rally into the end of the year. Of course, really culminating on election day, November the 5th. Now, this is still expected to be a relatively volatile time, but of course, after that, it'll be kind of like a bit of calm and the markets will go back on. Now, Fundstrat and Tom Lee have, of course, their data based on October coming with similar events. And you can split this two ways. You could either say October is going to be weak statistically, such as this one, 22% of the time, or you could say that if we come into October with 8 of the last 9 months up, which we have, that actually it should mean that this month is also bullish. So I think whatever's happening here, we have to be very adaptable to the current market conditions because we do know that the 3-month and 6-month rates, especially if we're going into a no landing situation, which we've argued that the market will think like it's going to be doing this for a little while, that we have a 100% track record of seeing a 3 and 6 month forward positive ratio on markets. So as we mentioned, it's earnings season. Why is this important? Well, because of course, if we do see profits come through, that's often how markets, of course, end up increasing. Profit is good. Profit leads into, of course, stocks being valued at higher levels. And of course, we also see Wall Street starting to upgrade across the board. Now, the big ones that will kick off this week will probably be JP Morgan and Wells Fargo. We know both of these do matter, and this plus BlackRock. So these will be the most important, and of course, we'll need to be paying attention to it. Few people have asked whether we're going to get a Bitcoin movement. We'll update these charts very soon, but do remember the Bitcoin tends to lag and then improve when central bank balance sheets start to improve, and that is something that we've seen. We also saw a positive for September, which tends to lead into an October, November, December run. Overall, it still looks pretty good on paper. In terms of other large dark pool transactions, we've seen tons in gold stocks, which we know may be topping off for the moment. And we also saw a large dark pool transaction come in, the 8th largest on record for treasuries. So where they've been dropping, looks like someone might have just been starting to pick up some treasuries over the last 24 hours. A very interesting read there indeed. When we look at the S&P 500, it's more of the same. We hit back to the exact same level as here. And of course, this is not an upgraded chart, but you can see that we basically sold. We came back after non-farm payrolls and we sold. So there's clearly some form of resistance coming through here, which is around the price of 57.50 on the markets, which just so happens to usually be a call wall. We're now sitting on a put wall, which you'll see in a moment. And if we do break through, we could create what we call a negative gamma event, which actually causes further selling, maybe as low as 5600 or 5620, which is something we've been looking for about 2 weeks now. Let's now look at the overall 5-day rotation. Energy stocks have been the best rotation. We knew that was going to be a good one, and they had a massive last 2 trade days, and it was pretty good over the overall. When it comes to the last 24 hours, though, we saw clean energy and solar come through, with energy just trailing behind, and most of the selling happening in the sector that we actually thought would weaken, which was utilities. Remember, it was incredibly unlikely to be able to hold gains based on the current rally that we saw, and we covered that in our last 2 videos. So make sure to check that out because that was a very, very good level there for utilities. Let's now move over to the S&P 500 though, and we'll look at the charts and the flows together. So first up on the SPX, the market has come back down to the support and it seems to be chopping up and down. Now this is what we call, some people call it a channel. I like to call it on the channel here a pullback in time. Basically an area where markets are burning the indicators back after becoming super overbought. And sometimes they'll go a little bit lower and then they'll rally through. And at the moment, we've got kind of 2 base case scenarios, which is something like this seems to be the most likely kind of course of action. You've got to keep your mind open though to something like this as well. So if we do end up getting a lot of chop as rotation occurs in the markets and then break up, that is still a very bullish sign. Remember, Wall Street is coming into earnings. If earnings live up to expectations, they'll reprice for the future and that automatically will start breaking out. In particular, one of the best opportunities may still be the Russell 2000, especially if earnings show themselves in this third quarter, like Wall Street's starting to look for. They're looking for that. Let's now move over to the US 500 futures here, and you'll notice again, we're putting pressure on this daily 20 moving average, and we've updated here the options high and lows for today, so make sure to put them in. Now, when it comes to where could the markets go to, 5620, 5600 seems like the most likely major support. And again, breach outs past 57, 60, 57, 75, that's going to bring in that super positive gamma movement. So where do we find the switches? Well, we know that the current trade day, the 8th of October that we're going into, is a huge put wall scenario. This is a massive level for the markets. And we know that if markets are able to break through and move and close underneath here, it could create a bit of a cascade effect down to even as low as 5,500. Now, of course, 5630 is the most notable next wall, which makes sense on the charts. And look at all those puts that start to appear. But also take a look at 5780. Now, we know that 57, of course, 60 to 75 kind of area is where we go back into positive gamma. So basically the market is trapped within 2 zones and we're starting to get a very clear case of where markets could go to if we break through. Look here at the 15th of November. Basically, if we start to move up very strongly, the most written strike is 6,000. Yeah, things are starting to heat up, of course, on the upside and the downside in both cases. Let's move over to CTAs. CTAs continue to buy the S&P 500. And of course, we've also seen them moving a little bit in some of the other markets as well, with silver getting bought up a little bit here as we pressure in the highs. And of course, then oil, as we already suspected, CTAs came along with price. And of course, that's where you kind of want it. You want CTAs to be coming with price. When that happens, you get that nice momentum, generally kind of squeeze on the options markets. Let's have a look at Tesla now. We know that Tesla's been up, down, and all around into the 10-10 event, and it came back down a little bit lower than you would suspect for this week, as 250 is the major strike zone from calls. And of course, there's not too many put walls on the markets right now. So this will be quite a volatile week for it. If it manages to get through 250, it's going to absolutely go ballistic, you would have to think, in the future, because you can see here the massive amounts of calls on that strike. So the 10-10 event will be now the main deciding factor for this stock. When it comes to NVDA, it does also get interesting. We know that 130 is key. We actually now see 130 and 131 as super critical levels when it comes to this market. So this is exactly where we want to be when it comes to the movement here in the markets, and we want to see that 130, 131 zone being reached. Let's now jump into the charts, and we'll start off here with high yield junk bonds. They're dropping off. Again, that's a bit of a sign of a possible pullback in the markets. When high yield junk starts to sell, along with some of the other reasons that we've got there, we can see little kind of corrections, but overall still very bullish in overall structure. Remember, unless high yield junk really drops below this 76 level, you don't have too much to worry about from the bonds perspective. When we look at the dollar index, that was been a very bullish move after non-farm payrolls. We suspected this was here. We already saw bullish flows coming in before the payrolls event, and it looks like pullbacks for now probably going to be met by bull demand. So there's a good chance that we might get a 102.80 to 103 from the US dollar itself. When we look at copper, more of the same. We've been doing copper for a while now. We really matched this incredibly well with China, and we saw copper absolutely go ballistic into the supply area. From now, though, what's been happening? Well, of course, we're seeing a little bit of a sell-off here in copper, and this is, of course, more in line with what we would suspect. Basically, a market that's selling off a little bit and then hopefully moving down to around this 432 action. And that could also be timed with the Chinese stocks as well. At the moment, copper's on what I would call first support, but I'd like to see it on the second support before things are all done. With gold, it's doing exactly what we would think. Pullback in time, which is basically a sideways market. Still looking for it to ideally move even lower, 25.60, with, of course, our intentions generally still being bullish overall on gold. So we kind of talked about this quite a few times. Silver gold ratio floating around in the middle of nowhere at this stage. It's still pretty low, and silver itself still struggling to break through that 32 level. So, of course, if we do get a breakout, we're looking at 34.60. For now, silver in consolidation. We'll keep looking at that chart. What about oil? Well done, guys. Fantastic trading. This is an excellent trade. Lots of replication in this. Actually comes straight out of our day trading masterclass. Most people were picking it up in here, and it, of course, led into some significant movements. Now, 76 is a struggle level for it. We know that this has been a fairly heavily traded area. 76 a barrel, we have to expect to possibly go sideways a little bit. And many people are looking at the macro and saying, well, we think oil is going to go even lower. That's totally possible. This was the significant first move from this market perspective, and now we have to reassess as it pulls back. So I'd like to see a pullback here into, of course, resumption. I'm not really going to think that maybe commodities or oil in this case is a great buy on the long term, but this was a fantastic hit into a major take profit. So big level there for oil. Tesla, as we know on the chart, struggling around 240. We know 250 is the big break zone. And I wouldn't be surprised into the 10-10 event to see it kind of do this. And then if it does have a good event for whatever reason, it could go ballistic. So we'll see whether that happens. NVDA is probably the most interesting single stock on the markets right now, pressuring in this high. You can see here the downward trend line. You can see the closure above that at 127. Could it be that NVIDIA is actually breaking out? And could it also be that NVIDIA will go up, the rest of the market will have a pullback, but this is showing the bullishness that we need to see? Well, one thing is we knew that this would probably go into what we call a massive consolidation. It's done so. 130 plus, that's where the options are. It's going to be a good one to watch. We'll keep covering it. Utilities now, we knew this would probably find selling. Probably still more to go on terms of the overall selling for utilities, but what a great run it's been. Again, congratulations to people on utilities this year. It's been a fantastic trade. Now we move over to China. So China actually dropped from the high here as they came back from holidays 10%. That's nothing to sneeze at. In the US market, that would be considered a catastrophe. Over here, of course, we've already seen such a huge increase that it's not necessarily that bad. That being said, though, this is again what we've been in line with. Large dark pool activity, large trades in general, leading into consolidation, if not slight declines. So yeah, this is the market that we thought, I'm kind of glad it's done this because we need to now see consolidation. And you know what the tell was for us in the live stream? It was actually one stock in particular. Everyone was messaging about this stock yesterday, guys. That's why you don't want to fall into the traps. And that was, of course, NEO. And NEO was getting so much love from everyone. Now, we'd already liked this stock down here, and we'd seen a flag, and we'd already priced it out, and it actually managed to do it into earnings, which was amazing. So this was an amazing hit at 734. Now, did it get the high? No, but 750, 734, what a fantastic level. And now, of course, we're seeing what we would call consolidation on the stock. Is it still low historically? Yes, but everyone was asking about them like we'd never seen before. Remember, nobody wanted to look at those stocks a while ago. Now everybody does. Let's move over to Apple. We're seeing more of the same, basically a trap market as Apple consolidates at the highs. Could we see buying at 216? Absolutely, if it comes down there. And at the moment, it's stuck in the middle of nowhere land. Speaking of nowhere land, US 2K. Tom Lee's favorite, and I know a lot of people don't like this in the comments, but his favorite for the year still hasn't really shown itself. We know here on the channel what we're looking for, and that's, of course, a 2280 breakout up high. And we're also looking for this flag to potentially break. So you can see here the very nice consolidation of a flag before the breakout. If we do get one in the future, that'll be cool. And we'll look for that because I think Russell could present a very nice opportunity if the markets do go bullish in the future. Let's now have a look at the NASDAQ, again, coming back down to the support level. If it fails to hold this level and we break underneath this alert down here, then where do we go? 19.4. So 19.4 is certainly a good zone to line up with 5,600 from the S&P 500. And that would be a very decent little pullback. Now let's look at Bitcoin though. Very decent weekend for it. Rallied up, didn't quite breach out past the zones that you'd want it to if you were going super bullish. Shows the first sign of signal strength. Gives a horrendous looking candle on the daily close. As you can see here, the shooting star pin bar style candle that no one likes to see. What happens if we break through here? Or it could be really good. So we'll keep watching Bitcoin. At the moment, you can make a case for both scenarios. Day traders certainly would have shorted here, and they'll be trying to push it down. And buyers will be pretty much sitting in this area here saying, you know what, we need to defend this zone. They kind of do need to defend this area. Buyers will want to defend and push up higher. If we get up higher past this level, I think we'll pressure 68 plus. So at that point, if we get through 68 plus, crypto fangirls and fanboys might just go wild. We'll see if that does happen. Let's move over to the news. As we know, FOMC meeting minutes is 2 p.m. New York time. Then we've got CPI, which is, of course, 8:30 a.m. That will be important this week. And then Friday, we have PPI, but really it's going to be about JP Morgan. The 10/10 event is coming for Tesla as well, so be aware of that. And we'll cover that and more this week. So make sure to subscribe and, of course, check everything out. Just a quick announcement. Looking forward to meeting a lot of you tomorrow at our Melbourne event. Of course, that is tomorrow. I've sent out the details for it again. And Sydney people, if anyone's coming to Sydney, New South Wales, make sure to sign up. We're starting to fill those slots now, and that's for October 30th. It'd be great to see you. And of course, it's a great event for you to learn and meet other people that share the passion for trading and stock investing, and of course, everything else in the markets. But more importantly, that also have probably very similar ideas. You guys rock. You have a fantastic day. We'll see you in the next one. Bye for now.